Good morning and welcome to this week's edition of Winston's Weekly, covering all things property. I'm your host for today's property chat. Welcome back, Winston.
Thank you, Peter.
As always, let's dive into what's happening in the equity markets. Markets turned back to their positive track this week, following a traditional weak start to the month of September. The market's optimism was focused on two key inflation data points this week: CPI, which came in slightly higher than expected, and then PPI, which was released overnight and came in line with expectations. Traders are now pricing in an 85% likelihood of a 25 basis point rate cut at the Fed's September 17th to 18 meeting. Winston, how did you view the overall market this week? What are your key takeaways?
Well, markets are still sort of focusing on data as it comes out. It's data dependent, and also the fact that September traditionally is a weak month for equity markets in the US. And so there was no surprise that it sold off a little bit when some of the numbers were a bit concerning. But that situation turned around, and we saw the market move back up again. But I think all the focus now is on the Fed's meeting, an announcement on the 17th and 18th, and I'm pretty confident that they will cut rates by 25 basis points. Over the course of this week also, in Europe, the rates were cut, and over in Canada, rates were cut as well. So, I mean, the central banks are in a more dovish mode, and so I expect the US to follow suit.
So shifting to the focus on the domestic markets, this week was very light with regards to key inflation points. That said, there was a lot of debate on whether the RBA's control inflation at all costs approach has caused it to miss the chance to ease pressures on the economy. This debate gathered momentum following the latest NAB monthly survey of business conditions and confidence revealed that August saw July's brief blip snuffed out as worries about employment and profitability returned to the forefront. Winston, what's your takeaway here?
Well, markets are somewhat focusing on different things over here domestically. The RBA, the governor came out last week or the week before saying basically that there'll be no rate cuts this year, which is a bit at loggerheads with the government, who is pushing, or they're pushing for, and the Treasurer himself is pushing for the RBA to sort of consider bringing in a rate cut before the end of the year because of the pressure on cost of living, mortgage rates, and so on. Personally, I'm pretty confident that the RBA will hold to their gun, and we're not going to see a rate cut here in Australia until early next year, February probably as the earliest time. I don't think things are so bad that we're going to go into a recession. So that I think that's going to keep the RBA from doing anything rash at this point in time.
Well, another major topic in the market this week was APRA's proposed changes regarding the future of bank capital structures, specifically impacting Australian investors' ability to invest in those high-yielding bank-issued hybrids. Winston, I'd love to hear your thoughts on this. Did this proposal catch you by surprise a little bit?
No, it shouldn't be a surprise. APRA has been talking about this for quite some time. This is some more information sort of coming out last week. The way the banks are sort of structuring their need to have capital adequacy is going to change somewhat, and it's going to make it harder and not as attractive for people to invest in hybrids. So there is going to be some sort of a change. Now, whether they'll revert to buying the equity directly, which is still paying a reasonable yield with franking, that remains to be seen, because there is a higher risk, obviously, in taking an equity stake rather than being a lender to the bank. So we'll just have to wait and see. But it was not a surprise. So I don't think people should be too worried about the news that came out.
Now let's take a look at the REIT market this week. How did REIT stocks perform over the course of the week? Any highlights or notable movements that you'd like to share?
The REIT market has continued to improve over the course of the week. We've had also a bit of M&A activity with Charter Hall Retail and Host Plus making a bid for HPI, which is Hotel Property Investments.
Okay.
That own a number of pubs. When I'm saying pubs, and Charter Hall had already built up a stake of about 14%, 15%, and they've made a bid at a price of $3.65 cash. The NTA is just above $4, so I don't think they're going to get it at the $3.65. And the market is actually trading at $3.75 thereabouts at the moment, so it's above the bid price. But it's a welcome development in terms of the sector overall, because it does show that there is some activity taking place. The HPI is not an operator of the pubs; they just merely own the bricks and mortars. So yep. they're the landlord in terms of the properties themselves. So they don't take operational risk. But I expect that it's not over yet, and we'll see what happens over the course of the next couple of weeks. Having said that, the directors of HPI have recommended to reject the offer because it doesn't value properly. Also, there's been some issues with the Eleanor Group in that they're in difficulty at the moment, and someone has come along and taken out the stake that Eleanor had in the office fund that they run. So there might be some further developments, but I suspect there's some assets there that are likely to be put on the market very shortly.
And moving along to next week, what should we be expecting on the property front? Any key data points or events that investors should keep an eye on?
Well, obviously what's going to happen in the US with the rate cut, with September the 17th to 18th, the announcement, I suspect that will provide, I suppose, a better outlook going forward, notwithstanding that we're unlikely to get a rate cut this year, but at least the sentiment is pointing in the right direction.
Perfect. Winston, thank you so much as always. We'll be back with another edition of Winston's Weekly next Friday. Until then, have a great day and thank you.
Thank you.